Back at it again here with another video with Invest for Tomorrow. To the first time viewers and investors, welcome to the channel. To all subscribers, welcome back. All I ask from returns for you guys to smash that like button. Let's see if we can get today's video over 40 likes. And here we are with the SPY ranging within the same channel that we've talked about, from the 360s to the 370s. And today we hit a new 52-week low at the lows of the day, guys. This is critical because we are at critical levels. We have a lot of data coming out this week, and today's data had an effect over the overall market, right? That's why things moved the way they did. We're going to break it all down. And today our SPY bot, since 10:05 a.m., sent out a bear indicator, and the outflows crossed, and you can see it there in the chart. It tried coming back up. Outflows crossed again with domination over the chart with that bear indicator, and put options went up 200% plus within an hour, guys. If you guys want to receive this clarity and edge over the charts, check out the link down below in the description to the 42 vision indicator, getting connected to the SPY bot, the QQQ bot, our newly released Tesla bot, and we have other bots on the way so that you can receive the clarity and edge that you deserve within the volatility of the markets to maximize on opportunities, whether stocks are going up or going down. And this is my opinion and perspective alone, not financial advice, but volatility is here to stay. And to be able to maximize within the volatility, having a clarity and edge makes all the difference within the charts, guys. It doesn't have to be 42 vision, but if you find value in what we share here and you want to become part of a growing community of investors all using these resources to maximize within the volatility, check out the link down below in the description to the 42 vision indicator and getting connected to our bots. So here we are with the SPY, as I stated, ranging within this range, trying to fight to stay above the 52-week low, and this week will make it or break it to either create a double bottom effect in the bigger picture, right? Coming all the way back down to where the June lows were, and creating a double bottom effect here if it could go ahead and create that W and actually bounce off of here or break to even newer lows, right? So we need to break it all down in today's video. But before we do, I want to share with you guys the home run opportunity I mentioned this morning over at the Discord. And as you see popping up here on the screen, these are some of the home runs I managed to find this week alone. And while that's not guaranteed to be this way every single time, we strive for opportunities like these every single day. So the home run of the day was spectacular, beyond expectations. And if you guys want to know about these stocks early on in the pre-market, check out the link down below in the description to the Discord. And by joining, you'll become part of a growing community of investors all looking to learn and grow together. So these are the three stocks I mentioned this morning. All of them gave jumps at 3 to 5%. 5 to 10% plus, but one of them turned out to be a home run, and it was ARDS. We caught this one towards the bell, literally 4 minutes before the bell rang, and right there it was with strength under a bull indicator. Inflows were holding up. They weren't going up as strong as we wanted it to, but it was staying above the midpoint, full strength on 42 vision, and within minutes it hit a highest point of 20% plus, guys. If you guys want to know about these stocks early on in the pre-market, check out the link down below in the description to the Discord. We look forward to having you join us, and we strive for opportunities like these every single day. So here we are with the SPY at critical levels, as I've talked about in previous videos, and it also did a full transition from a dip area to a rip area, and it only really bounced from 362 to 370. It seems pretty small, but that's a pretty big move, right, in just a few days. But we've ate it all up in just one day, going from 370 all the way down to a new 52-week low of 360.80, guys. This is super important because we're at critical levels of either bouncing from here or breaking even lower. I'm going to pull up the bull and bear indicators, which you can now gain access to as well. The link is down below in the description to the 42 vision indicator, getting connected to the SPY bot, the QQQ bot, our newly released Tesla bot, and we have other bots on the way so that you can receive the clarity and edge that you deserve within the volatility of the markets to maximize on opportunities, whether stocks are going up or going down. And you can now join the members using these resources to maximize in either direction by receiving this clarity and edge over the charts. And in today's video, I'm going to pull up the inflow versus outflow indicator, which adds that extra layer of confirmation and gives us that edge within the volatility of the markets. And slots are now open for those interested. The link is down below in the description to the 42 vision indicator and our inflow versus outflow. So here we are with the SPY. It's under a bear indicator, and outflows actually got crossed right after that midpoint, right? of the day. So it was actually pulling downwards. That bear indicator popped up. Outflows crossed and dominated as well. And we've pulled away from the midpoint here substantially to the downside, right? Now, inflows were actually trying to hold up, and there was a bounce here from 377 to 370, but very short-lived, right? And very risky too. Under that bull indicator at an extreme strength point, and it was sitting sideways there fighting, but the outflows dominated after that point, right? From 10:30 moving forward, that bear indicator popped up on the 30-minute. On the 5-minute, as you saw, our SPY bot sent out a bear indicator since 10:05. So few moments before 10:30, it actually was starting to already get weaker within the charts, and it continued, right? So we need to talk about what's going on here. We're going to look at the 30-minute, the 4-hour, the 1-day, as well as the 15-minute within the volatility. But let me pull up what actually created this weakness. So in yesterday's video, I talked about how important consumer confidence was, right? Turns out it comes out better than expected. But before that, in the pre-market, there was actually data that came out, and this is what actually affected, and both of them negated each other, right? And it turned out to be the durable goods. It came out negative. So that had an effect on the stock market. And then also that tomorrow there's multiple Fed members speaking, even Jay Powell, and we have a critical data coming out. And as you see it underlined there at the bottom, EIA crude oil inventories, guys. This is big because when you go on over to oil, right, you can see that oil has hit a new low here all the way into the 70s. It's been in a downtrend, especially when you zoom out and look at this from the 1-day. I mean, this got a bear indicator way up here at 113. The outflows crossed, and it's been going downward since. But if EIA, right, inventories of crude oil actually end up being negative or not anywhere near the expectations, it could start stirring things up here with oil prices again and start turning it back around over time, because when it's negative, that means that there's less supply and there's always going to be a demand. And if you look at it, it's already bouncing from 76 trying to go back to 78, and it's hit highs here of 80 cents almost, right? So $80 a barrel. So that data will be crucial moving forward and how it affects oil. I'm really happy oil is going down, actually. I'm one of the biggest advocates for oil to keep going lower. But, you know, volatility and a lot of different data and a lot of different inventories of supply and demand could have a huge effect on this chart and also on the SPY. So something important to keep in mind, right? So we need to watch that carefully, not ignore it, and also pay attention to how it could affect the markets, right? So that's going to be big. And then we have another big data point coming out on Thursday, which I'll be discussing in tomorrow's video. So here we are with the 30-minute. We have 360 as a key support level. If that gets broken through, the next support is 355. I'm going to be watching if these inflows could pick up here on the 30-minute. They're trying to switch from red to green. And same thing here on the 15-minute. If it can continue to hold and cross over, right? As it has, right? But hold above it and continue to pull away from it to the upside, cancel that bear indicator and get a bull indicator in the process. And if that can roll over into the 30-minute, that will be spectacular, right? We'll see these inflows continue here towards the midpoint, hopefully cross it as well and cancel out that bear indicator in the process with a bull indicator popping up. And when you zoom out and look at this from the 4-hour, we've been under a bear indicator since September 13th. The outflows crossed, and they've been dominating since, right? We've been in a downtrend, and we've hit a rip area here from the dip area, bull indicator to rip area, and from the rip area to the bear indicator to a dip area now, right? We hit the first dip area here, consolidation, broke lower. We're at extreme weakness here, and the outflows are dominating, right? Based off the 4-hour. When you zoom out even more and you go to the 1-day, we've been under a bear indicator here since 393. The outflows have been dominating since way back here on August 25th, 26th, and they rejected here as they were trying to come back up, and they've continued to dominate. And here we are on the outflows at minus 35, and I used the recent dips here of outflows of minus 36 and even minus 44 based off the inflow versus outflow indicator. And I always stated there was still room to go lower just based off the history, not guaranteed to react the same as these other two dips, but something to go ahead and measure off of. So I'm going to be watching if we continue to break even lower or how we react at these levels, especially how we're in a dip area here And when you look at the 1 day, right, let's go ahead and remove all this art here that I did. My drawing is not the best, but I actually try to go ahead and show you guys visually what's going on here. But in the last several 1 day charts, you could see we've had consecutively dip areas of 2 and 4 of them, and also right here 4 of them, and right now we've hit our 4th one. Now if you really look at this here, it's trying to level off, right? Like it's kind of sitting sideways. We need to see, is the dip going to continue even more predominantly, and how is it going to react in the inflow versus outflow? That's going to be key here on the 1 day chart, right? I'm going to be watching that very carefully as this continues to play out, and just based off history, we've hit 4 of these at most, right? Could there be a 5th one? Well, we're going to see this week, going into tomorrow and the next several days. But when you zoom back into the 30-minute, you could see here, it's actually ranging here between 360 and 370, as I stated earlier in the video. But outflows are dominating again today. We keep zigzagging. It's going to be important for this to actually start pushing up higher. Cancel out this bear indicator, hold above 360, break back above 370, and above 370 is up here towards 378, 379 mark, and then also on the 15-minute for these inflows to actually hold and pull upwards as well and cancel out that bear indicator. As always, guys, thank you guys so much for watching, and let's make some money.